Hello traders, welcome to the channel. What a day. If anybody has some hope that the market may be building a bottom and that we're gonna be having a bull market soon, well, today the market answered with a big red candle. So we're for sure still in a downtrend. As we look at the chart for SPY, you can see that we have past the support area near 530, 540. It has closed below 537. So the next logic support will be somewhere here, 524 area. If it surpassed that, then it will come down more. Maybe some support here near the 510 area. And then if it keeps going down, then the next support will be somewhere here. That won't be pretty. The other indices are pretty much the same. QQQ has come down to this support area. This has been a previous support resistance area as well. If it keeps going down, then the next support is probably somewhere here, 434, and then next area will be 420, 422-ish. DIA is the same thing. DIA had made a new low, so the next support area is somewhere here, 400, and then the next one is 385. So we can look at the IWM as well. IWM is the weakest of the indices. Maybe we need to come to the weekly on the IWM. As you can see, it has created this double top. Well, this double top, and then now the next support will be somewhere in this area, somewhere in the middle, maybe 182, and then 170. So no doubt we're in a bear market. So, but I'm gonna share with you some of the stocks and ETFs that I'm keeping an eye on. Not saying that I'm ready to get into any of them, but these are stocks and ETFs that are stronger than the market. So unless you are a um, trader who can do long trading and short trading, you can switch smoothly without any problem. Uh, a lot of people like to trade long charts, and these charts I'm gonna share with you um, can fit into that requirement. This is for educational purpose only. These are not financial advices. The first one I want to show is HLF. This is the one that I talked about in yesterday's video. As you can see today, it closed on a red candle, but it's still in this area consolidating. If we come to the weekly, the damage was not big, so it's still in this small box area, still consolidating. This chart on the long run, if it can stay here while the market keeps going down, which means it's stronger than the market, it still has the potential to surpass the 50 on the weekly and tackle some of this resistance here. As we talk, these will be huge gains, 30%, 43% if it takes out this area, and then 80%, over 100%. So I think this one still has some, is still very promising. So you can always trade the inverse ETFs. I'm gonna just show you some of the charts I'm keeping an eye on. SPXS. This is a 3x inverse on the SPY. So as you can see, this is a strong chart. But the maybe the good news for the bull is that this has some resistance in the $8 area on this chart. So that's very close. The next one I have is SQQQ. This is also ultra short for the QQQ. It's kind of the same pattern as the SPXS. RWM. Um, this one is pretty strong. We come to the weekly. This one is very strong, but also it's come to some resistance. Maybe that's the um, short-term new good news for the bulls. Maybe we can expect a short relief rally. Next one is SH. This is just 1x inverse ETF for the SPY. Same thing here, pretty much the same. The resistance here is very close. Next one is QID. This is 2x, I think, on the QQQ. So very similar chart pattern. PSQ, same way, almost identical. SDS, same way. So those are some of the inverse ETFs you can trade if the market keeps going down. And then today I found this one, the Mexico ETF. If you look at the volume, it's a huge volume spike today. I'm sure it has some news uh, related to that spike, but look at the chart. This you can't say that this is a bear chart. It has been stronger than the market, and now it has the 50 MA has a rounded bottom and is ready to go up, and then it's getting closer and closer to the 200 MA. Um, if it keeps going like this, it will cross above the 200 MA shortly. And then today, the price closed above the 200 and closed above this resistance area of 53, 53 and a quarter area. So this one, I didn't go check the news, but this one looks very promising. Maybe the best thing to do is not to chase, but wait for the price to consolidate a little bit and then maybe pull back to trend somewhat, and then we can get in. And then the first target is over here at about $56. If we zoom out a little bit, next target would be 57. The next target would be $62. So this one caught my eye because of the volume spike. EWZ is the next one. It's also an ETF. As for Brazil, this one maybe not ready to trade yet because if we come to the weekly, you can see that when we draw a trend line like this, we're right near the resistance line. So take this one out or draw it differently, even though in the short term it's definitely an uptrend. So right now it's in this wedge pattern. So if it decide to break out of the wedge and hold close pull back to this uptrend, then we can get in, and then we can try to see if it can come to this 200 on the weekly. If it comes to the bottom of the edge, then no trade for the long. The next one is CHWY. CHWY was going very smoothly up. We can zoom in a little bit. So it was a $120 stock. It got beaten down and then formed the bottom somewhere here and then started to go up. made higher high, higher low, higher high, higher low, so it formed a trend. And then somewhere down the road, it broke the uptrend. So, but interesting, interestingly, when the market were pulling down hard, it was forming a base. Let's go back to the weekly actually. So it was forming a base right above the 50 MA, and then if we look at the trend line here, look at the resistance and support. So it is right above the $30 area, which was in the past a resistance area, where after it passed that, it was a support area. So I think maybe it's trying to do a short squeeze to get out of the buyers who got in early. But I think this one still has good potential. So keep an eye on this one, CHWY. Next one I have is RKT. RKT. RKT is stronger than the market for sure, right? Because the market for the past couple of days has been going down and it is going up. So when the market pulls back hard, one thing you can do if you're not trading the puts, or if you're not um, doing any trading, what you can do is to work on your watch list to gather a bunch of ETFs or stocks that's stronger than the market. So when the market recovers, then those stocks will be the one that pays you off the most. So this one, it doesn't seem much on the chart, but it is definitely stronger than the market. And if we draw a trend line on the weekly, it looks like it just pulled in after it went up, made a higher high, it pulled back, and now it has made a higher low. So it has essentially formed a uptrend on the weekly. So what it does next, we have to watch. If it keeps going back up there, then we know it's stronger than the market and it wants to go up higher. Then we can get in, and there are some targets. There's some resistance here, here, it's $18 range, and then $21. So that will be great risk and reward ratio there. The next one I have is STNE. STNE is stronger. Today, actually, it was up 6.15%. If we come to the weekly, you can see that it is flirting with the 50 MA. So zoom in a little bit. In the short term, it break this downtrend, right? It formed a higher high and then pulled back a little bit, formed a higher low. So there's a short term uptrend, and then it closed above the downtrend line on the weekly, and then it rested. Remember, these are weekly charts, so rested for a week, and today or this week it's going. It formed a green candle, and it looks like it wants to close above the 50 MA on the weekly. If it does that, then the next target on the weekly will be to take out this resistance area at the 14.50 area. That's 26%. If it can do that, and then the next target will be like somewhere here, close to the 200. That's 40%. So this is a stock trade, in my opinion. So maybe after we pass this resistance here, maybe we'll pass this double top at 11 and 70 cents area, then see if it pulls back, give us an opportunity to get in, and then that will be a great trade. The last one I have is ABT. ABT, I put it here because it's stronger than the market. it broke the downtrend line, and then now it's consolidating above the 50% of this green candle here. And then, but then one thing you need to watch out, or we need to watch out, is zoom out here. So there is this, zoom out a little more, you can see that this double top here is strong resistance, and right now we are very close to that. 131. If we use the bottom here as the stop loss area, and then we got in somewhere here in the middle, it's about 2% risk. It's not that much, but the reward has to take out the recent high. That's the double top. The reward is only about 7%. So um, I don't know. Maybe the best thing to do is to watch how it does. Maybe it will want to come back to trend. So maybe it has a long way for it to come to trend, or maybe the trend should be drawn somewhere different. Maybe I need a steeper like that. But I think this one is worth to put on the watch list because it's in the short term. You can see clearly it's stronger than the market. So if the market recovers a little bit or have a relief rally, I'm sure this one will will be will have bigger gain than the market. So that's that. So remember the market is very volatile. So keep your stop loss closed or just stay on the sideline and wait for the dust to settle, and then we can get in. This market pullback actually gave us more a chance to get in and buy quality stocks at a cheaper price. So think long term and always follow the trend because trend is our friend. Hopefully you'll find some value in this video. Until next time, see you. Bye.